Hey everyone, today we're diving into a major shift happening right now that could reshape global markets. Forget the headlines shouting about tariffs. The real US-China economic war is being fought behind closed doors, through financial decoupling. And that might be even more dangerous than trade disputes. Let's break it down. For years, it worked like this. China sold massive volumes of goods to the US. In return, it built up a huge surplus of US dollars, which it then reinvested into American assets, venture capital, stocks, private equity. Chinese money fueled Silicon Valley. But that's over. Beijing is now pulling the plug, telling companies to keep their money at home. Why? Fear of sanctions, yes, but also a tactical move. Choke off capital from the US tech sector when it's already struggling to raise money. China is playing financial chess, and the US? It might be two moves behind. American investors aren't innocent either. Despite all the China is our biggest rival talk, billions of US dollars are still invested in companies like Alibaba, NIO, and Xpeng. Why? Because China is a growth machine, and smart investors want a slice. But that window may be closing. China is now taking it a step further, barring US investors from future growth opportunities. Case in point, CATL, one of the world's biggest battery suppliers, they even power Teslas, is preparing a blockbuster IPO, but limiting access to only onshore investors in Hong Kong. Translation: Wall Street firms are locked out. Retail and institutional American investors, blocked. Want in? Open an account in China's financial system, not the US. This isn't just about one IPO, it's a strategic shift to 1. Strengthen China's own financial sector, 2. Reduce reliance on the US dollar, and 3. Force foreign investors to come to them. If more Chinese companies follow this model, the shift away from New York to Hong Kong could snowball. Capital flows shift, the US dollar weakens, and America's grip on global finance loosens. And the kicker? Despite trying to isolate China, US investors are likely to chase those returns, even if it means ditching US markets. The US is also playing hardball, blocking Chinese investment in US tech, proposing delisting Chinese companies from American exchanges, and offering perks to foreign investors who bring money to the US. But here's the problem: top Chinese companies listed in the US, like Alibaba, are worth hundreds of billions. If delisted, those companies won't vanish. They'll move their listings to Hong Kong or Shanghai. Global investors? They'll follow the money, and that could drain capital away from US markets. This is also about the tech race. China is catching up fast in artificial intelligence, chips, and innovation. Huawei is pushing ahead with AI processors. DeepSeek's breakthroughs alarmed US lawmakers. Nvidia now admits the Chinese AI market could be worth $50 billion. Even AMD's CEO Lisa Su said it best: "You don't need the best chips if you have the scale and workarounds." Translation: China is innovating with quantity, not just quality. In 1998, China's R&D budget was 1/10 of the US. Now, it's almost neck and neck. US R&D in 2023 is $784 billion. China's R&D in 2023 is $723 billion. But here's the twist. A dollar spent in China goes further. Labor, materials, and manufacturing are cheaper, and that's a massive advantage in building tech infrastructure. Let's not forget the raw materials. China controls key rare earths like gallium and germanium, essential for semiconductors. Now they're cracking down on smuggling and tightening exports. That means higher production costs for American tech firms. It's not just a tech war, it's a supply chain war. Here's the cold reality. 18% of the world lives in China, 4% in the US, and 78% elsewhere. And in tech, network effects are everything. Whoever gets global adoption first wins. Just like Huawei did with 5G. Build it fast, flood the market, and own the infrastructure. If China manages that with AI chips and software, the US will be playing catch-up for decades. While Chinese tech grows, US policymakers are tightening restrictions, making it harder for American companies to compete. But innovation needs money, freedom, and speed. And if Washington doesn't move fast, China's lead might become permanent. So what do you think? Will China block even more US investors? Will the US reverse chip restrictions to stay competitive? Drop your thoughts in the comments, smash the like button if you found this eye-opening, and subscribe. We've got more breakdowns like this coming. Until next time, stay sharp.